Let me describe a standard trader's nightmare for you. You've done homework. You selected the right asset. You did all technical analysis there is to be done. You checked all the news that are going to come out on CNBC or on whatever. But your trade still went south. Instead of making profit, you are in loss now. Well, it happens. It happens. Nothing you can do about it. Hopefully it doesn't happen too often, but it does. So what we're going to talk about today is how to decrease, how to contain the damage. Not always you're possible to eliminate the damage, but you're definitely able to contain it. So we're going to talk about it today. But first, we're going to talk about what the markets are doing and what are the situation in the news that is happening. Okay, so as I said already, we're going to talk about the review, crypto markets review, industry news, and very, very important, how to recover a losing trade. And the second one is how to get an insurance for your trading. And this is very, very important and very effective for making your trades profitable if you're trading yourself, if you're not using the signals that Qubit Live provides or the robots. Anyway, the markets I'm not going to say anymore that they are very, very predictable. And the reason for that is that the fundamental analysis, no one said that fundamental analysis is not valid anymore. I mean, it looks like always, period of correction, but this period of correction on Bitcoin, this is Bitcoin Daily, is caused by a very, very significant event that happened in China, and we'll talk about it in a few minutes. And hopefully, not hopefully, but I'm almost sure, practically sure, 99% sure that the upward trend is going to continue because nothing changed. And the event that happened actually been taken care of. On the 4-hour chart, well, you see, this is the day of damage. After that, actually, there wasn't much of change, and Bitcoin settled in a relatively flat region. And I'm sure that we are going to break out of this region rather soon. Ethereum, on the other hand, behaving a lot better. The reason is that Ethereum is an asset of its own. I mean, it doesn't mirror Bitcoin like none of them. None of the cryptos, they're pulled up ahead, pulled upward by Bitcoin, but they don't mirror it. And it's especially clear on the 4-hour chart. You can see the same drop as we just saw in Bitcoin case, but Ethereum recovered rather nicely. Same with Litecoin. Ripple, again, is a totally different situation. We talked about it a lot, and we'll talk in a second again. I will explain one really major difference between Ripple and other assets, but that will be in a couple of seconds. Now, so what happened? What caused this crash? Well, first of all, I have to say that most serious institutional players and serious investors are considering this situation as an opportunity to buy more assets. I mean, and MicroStrategy, Grayscale, many companies that I know, many people that I know who I consider serious investors are getting in and buying additional asset. But actually, what happened? This drop was caused by Chinese blackout in one of the regions in China and Bitcoin hash rate correction. Whether they are related, these two events, I don't know, it doesn't matter, but the blackout in China was really, really significant. And you must understand that basically this part of China is responsible for huge portion of Bitcoin mining. And of course, that could not affect the situation, and the hash rate went down as much as, I think, 50% at the time of this happening. Well, it's all corrected now. It basically seems like it's, I'm sure that it's going to continue the uprise. Use this opportunity to get into the market in a heavier way than you did. Now, the Ripple. The crucial question, I mean, you ask yourself, I mean, people ask in different meetings, why the Ripple was chosen as the fall guy, sort of, by SEC. The answer actually is very simple and very superficial, if you may. The point here is that Bitcoin, for example, and Ethereum, they are not owned by anyone. We don't know who created Bitcoin, who Satoshi Nakamoto is, whether it's a person, whether it's a group of people, whether if it's a person, if he or she is still alive. We know who is creator of Ethereum. That is the group headed by Vitalik Buterin and a few other very, very clever people. But no one owns, it's nobody's. Bitcoin protocol, Bitcoin ecosystem, and Ethereum ecosystem belongs to the whole world. You cannot point out, you cannot choose a person or a company that owns this asset. It's not the case for Ripple. Ripple was created and sold initially and backed by the company known as Ripple. And basically it's owned by Ripple. So that's why Securities and Exchange Commission singled out Ripple out of all other securities. And you know what is happening right now? It's like tactical war games. Who wins today? One day Ripple wins, another day SEC wins. We will see the outcome of war, and that is going to happen rather soon. So I'll be watching it, and I will be telling you what is happening. Now, the main thing of what I want to talk to you about today, and I think this is very, very important, both technically and psychologically. So you lost a trade. Instead of, well, your trade went the wrong way. Instead of making nice and handsome profit, all of a sudden it's in red. All of a sudden you see minuses on your trade. And again, as I said, you've done everything. Don't blame yourself if you've done everything that you should have. But the question here is how to recover. There are several questions that you must understand before you go into planning the solution. But a couple of things that you need to know. You need to find out, to understand where the market actually stands right now. How big is the loss in proportion to the account capital? And if there are any emergency reserve capital available. Remember, we were talking about two major know-hows, two major secrets in trading. One is to know when to get in, when to buy or to sell. And the other one is to know which volume of the trade to choose. So this is what we are going to talk about in a second. So, but when this happens, when you see red, you start tearing your hair and say, how could this happen? I've done all technical analysis that there is. It could happen. I mean, the dominant trend suddenly reversed. Or you saw the false reversal, and then it continued. And support and resistance do not work. Breakout, you saw, well, it's already broke out of the flat corridor, but it's faded and ended in nothing. So there are many reasons why this could happen. And so, as I say, most importantly, you must understand how to get out. It's too late to trying to figure. I'm not going to say that it's not needed. It is needed to understand why this happened. But now we need to take measures. What measures can we do now? One is very simple. Close the trade immediately and take the hit. Well, it's a possibility. I mean, you do not eliminate your losses, but you at least you at least control them. Second scenario, do nothing and hope that market turns in your favor. Well, I know many people who do this, and with the good reason. And then there is a possibility to take definite actions to recover the loss, and I will tell you how to do it. One of the ways how to do it in a minute. Now, let's look at every one of these possibilities separately. So close the trade and take the loss. What does it mean? It means you're taking yourself away from the threat as soon as possible. You close your trade at a loss, you run away from it, and you step away and you look at the market as an observer. Whether you do it or not, you have a simple test. Let's say you got into the market on an upward trend, on a bullish trend. Now it's bearish. The question is whether you would get into the market now if you didn't have any positions open. This is a very good test, no single answer to it, but this is one of the things that you have to consider. Now, wait and do nothing. Well, basically, I'm not going to say that it's a bad solution, especially for not for traders, for investors. If you are an investor and you thinking of holding this position, you can afford it. Because as we talked about it, I mean, if you're an investor, the best way, the best line of act is not to look at the computer every day, at your computer screen. You cannot afford it if you are a day trader. If you are a day trader, you have less capital. You're trading with leverage most of the time, so you're not able to wait for a long time. And when you refuse to take a loss, you end up with a lot of dead positions. Positions that are, you could end up with a lot of bad positions that are in deep minus. And then there is a third way. You are taking action. Just I want to warn you. This is one of the possibilities. This is my personal opinion. A lot of people will not agree with what I'm going to say to you right now, but this is how I act, and this is how I recover a lot of trades, and how I helped many of my friends and clients, traders, to diminish, to lessen the loss. Doubling down, I will explain in a second how it works. It's a very, very risky strategy. Basically, it's based on the idea that the market is going to return sooner or later. And unlike the previous possibility that we discussed, that you just do nothing and wait, I mean, with doubling down, you can bring closer the point of no loss, of break-even point. You have to be very, very careful with this strategy, very careful. As I said, the volume must be kept straight, very small. Otherwise, you can find yourself in big trouble. But it works. Let me show how it works. First, I will show you how it works in gambling. Actually, it's part of the probability theory. It's based on the probability theory. It was developed first for a game in not middle age, like a few centuries ago, France. But then it went to be useful in the markets. How does it work in gambling, for example? First of all, I want to say, if you have enough money and if you have enough time, sooner or later you will end up with a win. There are a couple of ifs there were, as you noticed. So how does it work? Let's say you are in a casino, or you just playing with someone, head and tails. Head you win, tails you lose. Your initial bet is $10. You lost. So you are minus $10. What you do, let's say you are betting on tails or on red in casino. So what you do, you double your previous bet, and you double your previous bet, and you do it again. Now you are $20, and let's say the trade, not the trade, the bet went sour again. So let's imagine for a second. Now you are minus $20 and $10 from the previous one. So it's $30. You double the last trade again. It's $40. Let's say it's minus again. Same, up to $160. With $160 last gambling, last trade, you are at $310 minus. But the last one, let's say you went out positive. You made $620. That covers fully your loss. That covers fully your last bet, and it brings you the winning, the profit of $10. This is how it works. Again, as I said, this is a perfect no loss strategy. You can do it anytime you want, as long as you have enough money. But you can see that it adds up very, very quickly. I want to remind you of a funny story. I don't know how true it is, about a guy who invented chess. The ruler of India, liked this chess game so much that he said to the guy, choose any reward that you want. And the guy said, I want 1 rice kernel on the first square, 2 on the second, 4 on the third, 8 on the fourth one, and so on. Well, the ruler laughed at this and said, well, this is really funny because it's not going to be costly. Seems like in the whole of India, there was not enough rice to cover this. Same thing could happen to you here. If you're doing this, if you're using this strategy, and I know several people, and some of them are my colleagues in physics and in in science, who actually did this a lot in casino in Las Vegas and in Atlantic City in the US. But you need to start with a very small bet, and you have to have enough supply of money. Now to the markets. How does it work in the market? I just show it to you in one example, the same as I did before. Let's say Bitcoin is $60K, $60,000. You buy 0.1 for 6,000 US. All of a sudden, it went down to 58. Oh, okay, here I made a mistake. It's a typo. So it went down to 58. Your break-even point is 60,000. So if it goes back, and we're not talking about fees and charges of the exchange or anything else, if it goes back to 60, not 59, I'm sorry, this is a typo here. If it goes back to 60, you are in the break-even point. If you, at 58,000, buy another 0.1 BTC, so you double your presence in the market. You double your presence in the market. So what happens now? Now you have total investment of 11,800 for 2/10 of BTC, and your break-even level now is 59,000. So what did we achieve? We achieved the lowering of the break-even level. And that is very, very important. Yes, it went on the, because we increased our presence in the market. If you can afford it, it's very good. And it's working. And you continue. I mean, for example, if the market moves slower, still moves slower, you buy another 0.2, now you have 0.4, and your break-even level is going to go even lower than that. So this is how it works. So like on this picture, you buy, and then you sell. The idea is that you hope that the market will reverse sooner or later. It works very well in the trending markets like Bitcoin or Ethereum. So if you entered a trade up, but it went the wrong way, it's a very, very good idea to continue doubling up in the trending markets. Now, all this is based on, I told you about French mathematician who actually first described this method. I don't remember his name, Levy or something of that sort. The strategy is called Martingale. I'm sure many of you who are in Forex or in stock market or even already in crypto market have heard the name Martingale. It's a very, very good system which are used by even sophisticated traders. It's based on probability, as I said. It assumes the whole idea behind it is to assume that the market will turn around. We're not saying when it's going to turn around, because everything depends on when it's going to turn around. So it's a very risky one, because if the market does not turn around, you run out of your money very quickly. But it doesn't usually happen. In casino, it doesn't happen. It doesn't happen in Forex. And if you are trading on the trend in crypto, it also will not happen. But you need to have a lot of money to use this strategy. So basically, should you use it or not? Only if you have a big account. Using small account will eliminate your account very quickly, might eliminate, and that is not good, of course. So what happens if you actually got into a bad losing situation? Now it's not math, now it's not trading, it's a little bit of psychology, which is very, very important for a trader. Slow down, tell yourself nothing you can do, it happens. It happens, okay? No one, there isn't a trader in the world who at least once or 10 times or 10,000 times did not lose a trade. I lose a trade. Out of 10 trades that I make, about 1 to 2 goes negative, becomes negative. And obviously that is not good, but I recover. There isn't a trader in the world, it's not your fault. Take a break, don't do anything. The worst thing you can imagine you can do is to jump into the market immediately. Analyze you need to understand why this happened. Why? Because you don't want it to happen again. Don't follow the crowd. If like they say, if everybody jumps off the cliff, will you do it? Don't follow the crowd. You need to have your own opinion, your own decision, make your own decision on the markets. Believe in it, and then start again. And believe it or not, you will be, if you follow your strategy properly, if you listen and learn from people who know how to do it, sooner or later you will be successful. Don't be discouraged. Well, actually, basically, I already said this. Don't let this stop from your bouncing back. Trade again. Now, I want to tell you, so what we were talking about of the measures that you need to take, that you might take if your trade went down. But there are a few measures that you can make, you can take prior to opening the trade in order to make sure that you end up as a winner at the end of the day or a week or a year. It's called options, crypto options, and I want to explain you how it works. It's not so easy. No, actually, it is very easy. And if I explain it to you right now, you will understand it perfectly. In order to use it, you will have to come to one of our future webinars where I will exactly explain you how to use it. Now just understand how it works. Option is just a contract which gives a purchaser of this contract the right, but not an obligation, to enter or exit the market at a certain level, at a certain price, at a certain date. Very simple. The right to buy that you secure is called call option. The right to sell is called a put option. So that is the right to buy, the right to sell. There is also another variation of different options, and that is an American option and European. In American, the buyer can exercise the contract at any time. European style, you can only do it at the end of the expiry. But you can still sell it to someone, the contract to sell it to someone. So, but that is already like second level, next level of understanding. Let me explain you in very, very deep details how it works. And please listen to me carefully and very, very attentively. Let's say the price of a Bitcoin at the start of April is $50,000. You think that by the end of April, it will be much higher. You buy 10 European-style call options with a right to buy Bitcoin at $52,000, and you buy it for 0.002 per premium contract. Well, 0.002 of 50,000 is $100, so you pay $1,000 is $100. So you pay $1,000 for the contracts, for the right to buy 10 Bitcoins. 10 contracts of 0.01, so it brings you to 1 Bitcoin. So at the end of the month, you can buy 1 Bitcoin at the price of 52,000. Now there are two possibilities. One is, let's say Bitcoin is at 60,000, which actually happened, as we know. You exercise your right to this call option, and you make $8,000 profit because you bought it at 52,000. Now it's 60,000, so 60 minus 52 is 8,000. Then you spend 1,000 for the right for insurance, sort of, so you make $7,000. If, just for example, the Bitcoin price at the end of the contract is less than 52,000, well, you can still exercise and buy it at 52, which doesn't make any sense. But you can do nothing. You don't have to exercise your right. If you don't, you will have a loss of $1,000, which is, well, basically, which usually is built into your trading plan, and you walk out basically almost break even. Almost break even. Why do we need these options? First of all, for speculation. You want to make more money, but you don't want to risk too much. So for speculation, but indeed it was developed, this option was developed for hedging. What is hedging? Hedging is insurance. Insurance is hedging is a way to minimize your losses if the market does not do what you plan it, what you think it should do. So think of it as like insurance, your home insurance or your car insurance or health insurance. When we buy home insurance or let's say car insurance, we hope that nothing will happen, that you don't get into an accident, the car does not break down. And if it doesn't, you lost your insurance premium. But if it does happen, if something happens, instead of, let's say, just for example, your insurance premium is $1,000 and the cost of repair is $15,000. So you saved a lot of money. But if nothing happens, you lose this money. So this is the principle of insurance, and this works exactly the same way in the market. Well, so this is basically in a very, very skeleton explaining of what options are and how to use them. Watch for our webinars, Qubit Live webinars for traders, and there I will explain in great details, like step by step, taking you through this options trading, most likely on Binance. Okay, now let's talk about what is happening in the world. I mean, you might have seen this picture, but I was in such a hurry last time that I did not pay much attention, did not devote enough attention to it. In one of the last Simpson episodes, look at this. there is a ticker tape, and Bitcoin is set here at infinity. Well, it's funny, but thinking, I just looked it up yesterday, about 20 times Simpsons predicted what is going to happen. They predicted Donald Trump, they predicted Lady Gaga on Super Bowl, they predicted a lot of things. So basically, let's see whether they're right this time or not. And this is actually not the first time Simpsons turned to Bitcoin and to blockchain. Very, very famous. And if you are into this show, the gangbang theory, you know the Sheldon Cooper name. And Sheldon Cooper is the famous and very, very clever physicist. On Simpson, he explains how this is working. Look it up. If what I'm telling you how it works is not enough, look it up. Look up this episode. This is only like 3 or 4 minutes, and actually, I can tell you that he explained it very well. So Bitcoin to infinity, I don't know about infinity, but there are many views of people in the, like very deep in the market, who I'm not going to say agree with that, but sort of with infinity. But look at this. This is a chief investment officer of Guggenheim, no, not other than Guggenheim Investment Fund, predicted Bitcoin to 60,000. When my friends, when other my level people are saying something like this, well, you can take it or you can leave it. But when a person of this stature, of this level, is doing this prediction, you need to listen. And there are many others who do, who say similar things. For example, CEO of Goldman Sachs, saying this is a big, big evolution in cryptocurrency regulation, and that is going to move cryptocurrency very high up if the regulation is proper. And he confirms that they have a lot of clients who want to do Bitcoin, who want to do crypto, and they're looking all the time for the ways to accommodate these clients. And then there is another guy. He is from Silicon Valley. He is one of the major investors, and he is called Super Angel because on many startups he was in the very, very beginning. Multi-trillion-dollar opportunity. So, and we are actually in the very, very beginning of it. I'm sure you've heard about it. I am not going to pay much attention to it today, but I will talk about it next time, about the IPO of Coinbase. And now it's listed, directly listed on NASDAQ. And Mr. Ron Conway compares, in that sense, Coinbase to Google. Well, again, as I said way, way too often, let's wait and see what's going to happen. Not everybody agrees, not all bankers, let's say, agrees with this approach. For example, HSBC, one of the major banks, major financial institutions, not only does not recognize crypto, they are closing accounts of companies who deal with companies. Listen to this. Closing accounts of companies who deal with crypto. For example, if you are HSBC, you have a HSBC account and you officially work with MicroStrategy, HSBC will close your account. Well, hard to imagine that this could happen, but it's happening. Okay, but now from the world of high finance to like regular, your and my level of being in this world. Businesses do not wait for government, they do not wait for big investors. They are accepting crypto as it is right now and implementing that into their mode of operation. WeWork just recently adopted crypto, and you know what WeWork is. They are a huge multi-billion company that provides space for office space. Now they accept payment in several cryptocurrencies. And for you to understand, they are geared not for huge companies, not for like major companies who could rent the whole building or the whole floor. They are tuned to the level of one guy or a girl or a couple of guys and girls who are doing their small business. They're renting a room, an office or several rooms and the working space. This is how the work works. So basically, we're now all the way down to the level of ground floor of the business world. And there you can also buy your space with crypto. 70 million users to buy and sell cryptocurrencies using Venmo. That's one of the PayPal applications. 70 million users will have a chance to do this. And that is, of course, a huge, huge way for moving the crypto into the regular world of recognition. And on a different level, luxury blockchain developed by Louis Vuitton and combined with Prada and Cartier. This is something to make sure the blockchain is to make sure that the goods are not the real. The goods that they sell are the real Prada or Louis Vuitton or whatever. That's a big problem with counterfeit luxury products. And with blockchain, they're going to be able to eliminate this problem, more or less eliminate this problem. Okay, now we'll take a small break from information, and I will remind you about trading robots. You can do them. We have Qubit Life has very efficient trading robots, flat robot, trend robot, and a smart robot. This is the efficiency of trading and of trading efficiency of these robots. It's very easy to tune. You do it on an exchange of your choice. Right now, the choice is not very high. It's between Bitfinex and Binance, but still you can choose it, and you do it on your own account. And the smart robot gives you excellent strategy to trade, and with very good effective results of up to 20-25% per month. And you can get it from Qubit Life in a minute. And of course, if you want to trade yourself, if you want to do this with your own hands to open and close a trade, you can use our trading signals. You just subscribe to them and you use them, and if you like them, and you will like them, because I honestly myself, I'm using the signals that I do not produce myself. I am using the Qubit Life signals to trade. Okay, now everybody agrees that the only danger right now that could be the major danger, the major threat to the cryptocurrency world, to Bitcoin and others, is the issue of regulation. We know several companies that regulate Bitcoin use, and then there are several, not companies, countries, I'm sorry. And then there are several countries that not only regulate, but they they prohibit it altogether. India, Turkey, Morocco, Nigeria. I mean, these are the countries that prohibit Bitcoin. But, well, they have influence in the world, but none of these countries has such an influence as US. And right now, Biden administration is developing a regulatory framework, which is going to be very hopefully effective and good for using the cryptocurrency. Why do I have my hopes? The new chairman of the SEC is Gary Gensler. I know this gentleman. He's a professor at MIT. When I was at MIT, I met him. And I know him as a very clever person and very reasonable person. So let's hope that this regulation is going to be proper. And this is what the Biden administration, as I said, is doing. It's undergoing this right now. There are voices from all levels. For example, Kevin McCarthy is a congressman, urges the Treasury Secretary Janet Yellen, and it's Jerome Powell is still the chairman of of SEC, that America should not neglect the issue of cryptocurrency. Otherwise, as he says, America will fall behind other countries. He doesn't want it to happen. And a very, very interesting development. I was planning to tell you about it last time, didn't have enough time. Lots of fears around Bitcoin. And one of the major fears is not only Bitcoin, crypto in general. And one of the major fears is that it could be used for illegal activity. Well, there is a person who is not very, very unknowledgeable in the issues of illegal activities. It's a former acting director of the CIA, Michael Morrell. I mean, CIA deals a lot with illegal activities. And he actually says, and this is very, very important, that Bitcoin, the idea about the use of Bitcoin in illicit finance are really overstated. Even more, he's saying that blockchain is highly effective crime fighting and intelligence gathering tool. These are his direct speech. And obviously, I mean, with blockchain, you know exactly where the asset goes from and where it goes to. So it's very, very convenient and very, very effective. Well, unless you use mixers, the mixers of Bitcoin are the special application that make it a little bit more difficult. They do not prohibit it altogether, but they make it a little bit more difficult to follow the fate of a particular transaction, of any particular transactions. And the last word is the funny word that FBI is using these mixers. So like they say, do as I say, not as I do. Well, basically, remember I told you that FBI at this point is one of the major holders of Bitcoin in the world. They confiscated it from Silk Road darknet operation, and it's a huge, huge quantity. I don't remember how many percent. I will check it out, but they have huge quantity of Bitcoins in their stash. And there is an interesting development from the other side of Atlantic, Britcoin. This is how they are going to call it. Britain is preparing, the Bank of England is evaluating the creation of digital currency, Britcoin. Well, they say this is to protect sterling against other cryptocurrencies and improve the payment system. Well, the decision is not made yet. Britcoin it's a very, very catchy word. One thing that they say that the ledger may not be distributed, and they are not going to call it cryptocurrency, but this is what we all call CBDC, central bank digital currency. And since we're talking about governments now, our Argentinian central bank is demanding, not asking, demanding local banks on information on customers who deal with cryptocurrencies. And there is a class action suit right now, complaint against it in Argentina. Sri Lanka behaves in a very, very nice, I would say, very reserved way. The Central Bank of Sri Lanka just warns people that dealing with cryptocurrency might be high-risk event. Well, it isn't life the high-risk event, but they are not regulating, they are not prohibiting the use of cryptocurrency in their country. Nigeria, as I said, is prohibiting their new regulation, prohibiting outright the use of cryptocurrency, but that only gave push to peer-to-peer Bitcoin trade. And in terms of peer-to-peer, Nigeria is first country in Africa that is doing this. I mean, in terms of volume. Then goes Kenya and Ghana, and South Africa, which was second in last year, now is in the first place. So difficult to stop people from using crypto. Even if the official use is prohibited, there are ways to avoid it. And well, that's what governments don't like. That's what regulators don't like at all. And now in Ukraine, this is a very interesting, they do not prohibit Bitcoin. They do not prohibit crypto. But they say that if officials do not disclose the holding of Bitcoin, not only officials, I think everybody, do not disclose holdings of cryptocurrency in your accounts, the offender could spend up to 2 years in jail. Why Ukraine? Why they are so concerned about it? Very simple. The latest poll, the latest research showed that more than 2.6 billion in Bitcoin are in the hands of Ukrainian officials, public officials. And they actually declare this, but still this is a huge number, 2.6, I mean, a lot of money in Bitcoin in the hands of Ukrainian officials. 46,351 BTC. Well, people listen to this, but nothing stops them. 12 crypto billionaires, according to the latest Forbes list of companies, and these are people who became billionaires by using crypto. So what can I say? I showed this picture many times. I will show it again. Think about these billionaires and don't miss the train. I mean, the train is still in the very, very slow motion. You can still jump on it and change your life with the help of Qubit Live, with the help of both robots, with the help of crypto trading education. You can change your life. You can change the life of you, your family, forever. Don't miss the train. I want to say thank you to these resources, very, very useful ones, especially bitcoin.com. And I want to wish you very, very good trading week and very, very profitable trading week. And I'll see you next week. Goodbye. This is Dr. Leon Rebelsky.